Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. So in today's markets, guys, not much macro news at all. As a matter of fact, your indexes, SPY and QQQ, were actually red for a good majority of the day before reverting into the green in the late afternoon after some Apple news helped lift those indexes. Apple coming out with some news that they were cutting their plans to potentially manufacture an electric vehicle, which was supposed to happen in 2027 or 2028. Now they have just completely scrapped the project altogether, and the 2,000 people that were working on that are now being repurposed to AI ventures for Apple. So we're going to cover exactly what happened in that news headline over the course of the day. We're going to cover it when we do the Apple technical analysis rundown later on in the video. In other news, we also have an important GDP report that's going to come out tomorrow morning. And we also have some PCE inflation data coming out on Thursday. So the next 2 days should be fairly interesting to get a better gauge of whether or not the economy still maintains a healthy trajectory, even in spite of our hotter than expected January inflation numbers. So in today's video, guys, we're going to go over one earnings report that I have prepared for you guys. It's going to be Square. They came out with earnings last week and have had a significant stock price increase since then. So we're going to take a look at, is the company pivoting in the right direction, or was the earnings just a one-time bump in the share price? We're also going to cover our major rundowns of our indexes in terms of technical analysis, of course, and our big tech stocks. And lastly, I will do another portfolio update because we did make a little bit of changes in the portfolio. So instead of doing 2 earnings today, going to do 1 earnings, so that way it gives us a little bit of time for the portfolio towards the end. So without further ado, guys, let's get right into today's video. SPY up 0.19% on the day, QQQ up 0.24%, but you can see that for a better part of the morning, we were red before that Apple news came out, and then Apple really surging into the market close here. Look at this massive candle here over a 2-hour period, talking about 1.5% on Apple. And since Apple is your largest component in the markets pretty much, well, actually, sorry, Microsoft did overtake them, second largest at this point, still a very large component. That move was enough to swing the indexes both positive into the end of the afternoon. So decent little recovery. Bulls still in full control. In terms of the sector relative performance here, you can see that on the day it was a fairly mixed market. We did have some nice performance by financials, healthcare pulling back for a nice, well-deserved break, and big tech was fairly mixed as a whole. Same thing with the bottom half of the market, fairly mixed as a whole. In terms of the one-day relative performance, however, everything pretty much ending the day in the green. This was a lot more mixed in the early market session, but everything really pulling together into the close. On the 1 week relative, everything except for real estate still maintaining green as this bull run after NVIDIA earnings simply just continues, and our upwards trajectory simply just continues in SPY and QQQ as well. So before we do a bit more technical analysis to see are our indexes still healthy, we're going to tackle Square earnings. So let's get into that right away. So Square, otherwise renowned as Block, a very, very interesting company, guys. I had avoided playing this one last year because one of the things that was heavily plaguing this company was the fact that they were growing revenues fairly well, but their cost control was just not up to par. So it's been a great thing that interest rates have come up. It's made the company realize that they need to do a lot better of a job of cost control. And as of Q3 into Q4 of last year, they have significantly improved their cost control and made it one of their largest concerns for the next 2 to 3 years. So now in terms of revisiting Square, after reading their earnings report and everything, it's an extremely attractive company now that they have their cost under control and we have management in line with the same direction of what shareholders wanted, which is positive net margins for the company. Well, I do think that this stock can be poised for a nice breakout all the way potentially up to $100 in the forthcoming months. Now, if you guys don't know what Square does, they are basically a 3-in-1 solution. They're a combination of 3 companies that you guys may know already. So they have 2 lines of business. Number 1 is going to be their Square business, whereby they work with merchants to provide payment application software. So if ever you've seen a merchant that uses a white terminal and potentially a little white square for payments that you can tap your card on, that is a Square product. So they're really doing a good job of enabling small and medium businesses instead of having those businesses to use payment processing networks provided by Moneris and other companies like that, they have really branched out and created their own. So that's their first line of business. Their second line of business has everything to do with their Cash App application, which is a peer-to-peer method of transferring money. So if I want to transfer money to my mother, let's say, I can go on Cash App and do that. But also, Cash App has many other services that they're currently taking market share away from other players. They have a banking division for it. They have a savings and deposits division for it, and they also have a stocks and crypto trading division for it as well. So it's really a three-in-one solution company right now that really combines PayPal's abilities in terms of their Cash App platform that Square uses. They have buy now, pay later solutions as well for their customers, which is some of a firm's business. And then they have the banking, trading, and loans division, which is pretty much what SoFi does. So this company does what three other companies do in one single company. So very, very good for them. Great market exposure for that. They have revamped cost control. They have a focus on social banking. Social banking is just basically putting the user in control of its own banking. So they're basically trying to bring fees for everyday banking solutions down to zero and really listening closely to what the consumer wants in order to attract more and more people to their banking network. 2024 plus, they're supposed to have consistent net margins in the positive zone right now. It's been a net problem for them in the past, but they are on a very nice trajectory for the future. They also have a low amount of shares compensation for management and executives, which I like. They have a low amount of debt as well, and their growth is absolutely phenomenal. So let's take a look at what happened during their earnings. Now, we have a slight little miss here on EPS. That was due to a few one-time write-downs of goodwill impairment charges. That's just a fancy way of saying they made some investments in the past that haven't been performing too well, so now it's time to take those losses on paper. So that's why they had a big miss in Q4 for the EPS to wrap up the year with those one-line items. Now, they had a nice little beat on revenue, however, by about 1.33%. So this company's trajectory is fairly good. You can see the EPS growth finally is going to be expanding very beautifully and aggressively over the next 3 years after having been flat pretty much for the past two. So love to see that EPS expansion, and revenue expansion has never been a problem for the company, but you can see here really starting to ramp that curve up to 2027, all the way up to about $34 billion. Last year reported about $22 billion. So very good growth curve in terms of the revenue. Now let's take a look at some of the headlines from the CNBC article. Block shares surged 16% after the company announces a surprise profit. And they did have a nice little leap here from before their earnings. They're still up from their earnings pretty much over about 13-14%. So very, very good for them in terms of their results and how the market reacted to them. Now, Block stock closed up 16% Friday, a day after the payments company reported fourth quarter earnings beat analyst estimates on gross profit and showed strong growth in its Square and Cash App revenue. Block posted $2.03 billion in gross profit, up 22% from a year ago. That's a significant increase in gross profit here. And they focus on gross profit just because net margins, net profit is negative. So they'd rather focus on gross profit improvement and cost control to eventually be net margin positive. Now, the company raised its adjusted EBITDA forecast to at least $2.63 billion from $2.4 billion. So very significant raise here by almost about 10% in terms of earnings for the next quarter. So nice little increase on earnings. Block, formerly known as Square, ended the year with 56 million monthly transacting actives for Cash App in December. This is a very large number, guys, with most of these customers using it for either peer-to-peer payments or the Cash App card. They even have a Cash App debit card. So if you were to load some money in your Cash App, then you can actually use that money as a banking solution to then go pay in different stores using their debit card. So this is something that only they do. Not even PayPal does this yet. Its Cash App business reported $1.18 billion in gross profit, 25% year-over-year rise. And we're going to take a look at these numbers and how significant they are, guys, when we go over their earnings prospectus here, right? So the company, which is run by Jack Dorsey, who is the ex-CEO and founder of Twitter, said its Cash App card has 23 million monthly actives in December, up 20%. That's more than 2 times the growth rate of total monthly actives. So doing a great job of leveraging their social media marketing and whatnot to attract more and more customers to the Cash App platform. We believe this strategy will enable us to build the largest network in the long run with a highly engaged customer base using Cash App as their primary banking solution. So very, very good for them for positioning towards the banking sector as a whole, trying to get more and more customers away from legacy banking solutions. The payments firm has focused on slimming down operations in recent months. In January, the Block CEO reportedly said in a note to staffers that the company had laid off a large number of workers. This followed another round of layoffs in December. Jack Dorsey said in his note to shareholders that the company was now below a previously set cap of 12,000 employees, so they cannot have more than 12K employees. We're going to operate under this cap until we feel it's holding us back, which is likely years out. So still going to properly manage expenses for the foreseeable future. That's exactly what we want to see. Now, a few of their deals that have gone a little bit wrong here, which they have wrote down. One of them was in music streaming business Tidal. So they acquired Tidal. They've since been writing down the value of the company for the past 2 years. It's not been the best investment for them. They also acquired Afterpay in 2021. That's a buy now, pay later solution, which is similar to Affirm for $29 billion, its largest acquisition ever. This also acquisition is still not yet paying dividends for the purchase. This division is still actually running at a net loss for the company. Afterpay has struggled since the deal announcement, posting successive quarters of losses through 2022. Dorsey said in his note to shareholders that integrating Afterpay more tightly into Cash App and using it to power Cash App's buy now, pay later tech were two focuses for 2024. Block's strong quarterly results and full-year outlook prompted Wall Street analysts to upgrade their rating of the stock Friday. So, all of that being said, guys, analysts were extremely content of the company's cost management and its ability to streamline its businesses into two distinct divisions. Its Square application for merchants and sellers, and number two, its Cash App business. And the large focus is going to be on expanding both of those lines of business. Now, let's take a look at some of their shareholder letter. And I have to be honest with you guys, this is one of the best presentations that I have seen in a very long time. All right. They do a great job of breaking down the nature of the business and how they're repositioning this. So let's pay close attention to our shareholders. This is the first line that starts the entire shareholder letter. We've done a lot recently to reduce our costs. Now we're going to focus on growth. So that is exactly what you want to see front and center. They know that the costs were a problem for them in the past. They've addressed those issues, and now they're going back to focusing on growth. That's very, very good management. Now, we believe the most direct opportunity for Cash App to drive meaningful top-line growth is by converting our existing base of 56 million monthly transacting actives who mostly use peer-to-peer and Cash App Card into primary banking actives who deposit their paycheck into Cash App and generate significantly more inflows per active. We see a meaningful step-up value and engagement as customers choose to deposit their paycheck with us. So what happens when customers deposit their paycheck with Cash App? Well, Cash App Card actives who deposit at least $2,000 of paycheck per month spend nearly 6 times more than Cash App Card actives who do not deposit a paycheck with Cash App. So that's why they're going after the banking sector. They really want to have more people depositing their paychecks on the platform because in turn, they usually spend more on the platform, building the ecosystem network out. That's perfect for the company, right? So moving on further below here, we're going to take a look at some of their other segment highlights for the company, right? If my PDF reader can cooperate. Give me a second right here, guys. All right, so 2023 highlights. So you can see the gross profit, $7.5 billion, 25% year over year. They've been growing their gross profit, almost net profit positive, but it's very good to see that they are growing their gross profit. This just means that their operating expenses are not growing as fast as their revenue. So they're really doing a great job here of bringing more money in terms of top line revenue growth. Now, Square gross profit. So here's the breakdowns of their lines of business. Square gross profit, 16% year over year to the upside. Cash App gross profit, which is a bigger business than their seller and merchant business, 33% growth year over year. Everything moving in the right direction for the company. Now, let's take a look at their Square ecosystem specifically and see what's happening with that. And you can see you'll see that they're making some very good improvements, guys. This company is just so focused on giving customers what they want from their feedback. In the fourth quarter, we began to leverage the pay-as-you-go model, offering select prospective sellers free hardware upfront in exchange for a higher processing fee. So no longer will these merchants have to pay for the installation and software of those Square card readers, essentially, and the Interact debit card money readers, right? When you're trying to scan your card on something, they're going to give that to you for free, but as a byproduct of that, they're actually going to charge a higher processing rate. So removing upfront hardware costs enables more sellers to adopt Square products and aims to minimize friction in onboarding, which can drive incremental sellers and gross profit to our ecosystem. Nice little upgrade here. In January, we launched a Restaurant Essentials bundle, which offers software products such as Square for Restaurants, Square Online, and Payroll at a flat price. We see an opportunity to win more upmarket food and beverage sellers. We believe one way to do so is by cross-selling earlier in their journey and packaging products that resonate the most with them. Very good, guys. They're listening to what their customers want and they're implementing these changes. It's exactly what you want for the company. Right? In the fourth quarter, we launched a Gen AI conversational tool for our customer-facing teams to improve efficiency. So after cutting a lot of their customer service team, they're now replacing them with AI, which should really do a great job in reducing costs. So another little positive headline for them. So now for the Cash App ecosystem, what are they doing for Cash App? Well, in the fourth quarter, we launched free overdraft coverage. That's excessively good, guys. It's something that the consumers wanted for a long time, and now they're offering that to most consumers. Most big banks do not offer this service for free. Our savings product was one of our fastest growing products in its first year. So to build on that success, we began rolling out a savings yield feature in January, offering 4.5% annual interest on savings balances to paycheck deposit monthly actives, and 1.5% annual interest on savings balances to Cash App card account holders. So you see here, if you deposit your paycheck regular with them, you get 4.5% annually. If you don't, only 1.5%. So the incentive is there. Keep in mind, your 10-year treasury yields, right? Or the 2-year even is paying just over about 5% right now. So very easy for them to make some money doing that. Now, Cash App Borrow continued to drive momentum in 2023, originating $3.6 billion in short-term loans, up 74% year-over-year, while maintaining historical loss rates at less than 3% on average. That is very good. 23 million Cash App card monthly actives, which increased 20% year-over-year. So here is your Cash App Borrow originations, and your Cash App monthly users is also netly up too. Now, with commerce, we have the ability to make our customers' money go further by allowing them to have more control over the way they pay. Listen to this. We experienced strength from our buy now, pay later platform in the fourth quarter of 2023 with $8.6 billion in gross merchandise volume, up 25% year over year. So here you go, guys. Here is your Cash App Pay actives, right? In terms of active members. Growth on a quarter over quarter basis. So 3 million extra users and $2.5 billion in annualized gross payment volume. So very, very good, guys. Every single aspect of their business is growing in the right direction. We're not going to do the financial discussion. We'll save that later down below when we tackle their actual income statement and balance sheet. Square ecosystem revenue and gross profit. Now, the breakdown per division. Take a look at this. In the fourth quarter of 2023, Square generated $1.81 billion of revenue and $828 million of gross profit, up 12 and 18% year over year. So the revenue up 12, the gross profits up 18%. Very good. For the full year, Square generated $7 billion of revenue, $3.13 billion of gross profit, up 12 and 16% on a year over year basis. So on the quarter, outperforming. On the year, outperforming as a whole. And you can see, look at this retention rate, right? So the pre-2020 cohorts, this is everybody that they onboard on a yearly basis. And you can see not only do they have an extremely good retention rate, but continuously increasing gross profit from their members as a whole. Very, very solid numbers by Square. For the full year 2023, gross profit from software and integrated payments and banking products each grew 18% year over year. So doing a great job, guys, of leveraging their new savings accounts, their new loans that they can offer through, buy now, pay later, or just straight out loans, just everything working for them, guys. Their banking division, their brokerage division, whereby you can buy stocks and crypto as well, is increasing. Everything going excessively well. And in their Square ecosystem as well for their merchants division, And sellers division, everything performing well as well. So really nothing bad to say about the company. They're really, operating on a full cylinder basis right now. Really nothing bad to say with them at all. And here's your gross profit by annual Cash App cohort. So before we saw the Square cohort, but now you can see that even the Cash App division, look at this retention rate. Their retention rate for all their customers is extremely high, not only from pre-2020, but also over the last 3 years as well. So just continuously increasing their customer base. There's really nothing bad to say about this company at all. 56 million actives, and you can see here the Cash App inflows per quarter. Look at all the money that people funnel and deposit through Cash App, $63 billion in the quarter. So the company really doing an amazing job in both their lines of business. And now we're going to take a look down at their financial statements, because I want to show you guys that in reality, this company is doing a great job of trying to generate net profit through, pursuing operating positive leverage, meaning growing revenues faster than expenses. Now, let's take a look at some of the revenue segments. So revenue, transaction-based revenue. So they break it down into transaction-based, subscription-based, their hardware revenue, which is when they make merchants pay for their little Square devices that you can tap your card on. And then they have Bitcoin revenue. Obviously, they have a lot of Bitcoin trading revenues as a whole, but they also invested in Bitcoin a few years back, and that's been a very good investment for them too. But for now, let's focus on these revenues right here. So transaction-based revenue is up 10% on a year-over-year basis, decent growth. Subscription-based revenue, 30% to the upside. That is excessively good, because you guys know subscription-based revenue is a higher margin business. So nice to see the higher margin business growing faster than only your transaction-based revenue. Total net revenue up 25% year over year. Now, is that higher than they're growing their expenses? Yes, it actually is. So take a look at your transaction-based costs. The costs are only going for transaction-based costs on a line per line basis. Look, revenues are up 10%, expenses are up 10%. So they didn't really do much of an improvement there. However, subscription is far outpacing. Subscription, you remember 30% year over year revenue growth. Their cost growth is only about 24.8%. So growing subscription revenues faster than the cost of those revenues are growing. Now, total cost of revenue. So here's your total cost of goods sold, 24.8%. That is below your 25% total revenue growth rate. So company, yes, benefiting from positive operating leverage. And as we've said, as their cost controls come into full effect this year and next year as well, this number should get even better. The company's operating leverage should be increasing too. Now, look at their operating expenses. So are they spending too much money on sales and marketing, general administrative, and product development? Well, product development, they have to spend money on that because that's their bread and butter, right? So this is up 27%, but it's not that bad. Most of this money is obviously spent on engineering to develop further and further updates for their suite of products. So normal that you have a 27% increase in your product development category. Not that bad, however. Now, sales and marketing, you can see here, guys, they did a great job of tapering this back to pretty much last year's expenses. So no ballooning growth in sales and marketing expenses. And Jack Dorsey reiterated that this also should be fairly flat for 2024 too. Now, moving on to general and administrative expenses. Now, your G&A expenses also encompass some shareholder compensation. So it's a 2-for-1 there. I mean, not shareholder, but stock-based compensation for management and executives. So your G&A expenses were, substantially up, but not that bad. A lot of this, guys, comes down to shareholder compensation. So the ratio wasn't too terrible. Total operating expenses up about 17.6%, which is also lower than your revenue growth rate too. So both segments, the cost of goods sold and operating expenses, growing less quickly than your total revenue is growing, shows that the company's doing a great job of managing their costs, guys. Now, in terms of their balance sheet, just to show you guys that they don't have a lot of debt, we can go over here just quickly just to show you in terms of a visual representation of that. So visual representation, you can see that they ended the year with about $4.46 billion in debt, but cash and cash equivalents was fairly high at about $5.77 billion. So more than enough cash to pay down that debt if they were so to choose. So here is that breakdown right here. You can see cash and cash equivalents, and your investments that they've made is worth about that, $5.7 billion as we were talking about cash and cash equivalents, and your long-term debt sitting down here at about $4.1 billion, plus a couple other receivables here or excuse me, a couple other liabilities, not that much, brings their total debt roughly up to about 4.5 billion, but largely enough cash to pay that down if they were so to choose. So everything looking very good. And cash flows, we don't really need to take a look at cash flows because they're still cash flow negative. But what I did want to show you guys is that they have a fairly good stock-based compensation here. So stock-based compensation, only 6% of total revenues for the year, $1.27 billion here worth of share-based compensation, and their total revenues for the year was about $22 billion. So only about 6%. So that's very good for a growth company. Very good management of share-based compensation. So as a whole, guys, I really like Square. They're operating at full capacity right now. Great cost control, great management decisions as of recently, great expansion of both lines of business too. Their Square division and their Cash App division, diversified offerings from the platform, right? So you have a Cash App platform for them. They have the buy now, pay later solutions. They have the banking, tradings, and loan division. And then they also have what they're known for, right? Their Square merchant and sellers platform, whereby they enable small and medium-sized businesses to have, payroll and payment solutions when customers are looking to pay for them or when they need to keep track of employee expenses as well. So all in all, guys, every line of business for this company is growing excessively fast. And by consumer reviews, everybody loves the platform. So that has to be notable as well. Now, let's talk a bit about valuation. At $77, which is their current trading price, it's actually really not that bad, guys. Their forward PE ratio, considering their forward earnings here next year of about $3. Let's take a look right here. $3.15, right? Their PE ratio for 2024 at the current price is about 24.4. Not that bad at all. And their PEG ratio, when we consider this high EPS growth of 46% for the next 3 years, their PEG ratio for the end of 2024 is 0.53. That is extremely cheap, guys. And I'm using non-GAAP numbers, but if you were to use GAAP numbers and do perfect accounting, their PEG is only about a 1. By all means, by all standards rather, this company is fairly valued, even undervalued potentially in relation to their growth, which is why I do believe it is a great buying opportunity right now for the foreseeable future. The company is turning around. It is not the same company as it was late 2022 and early 2023. They've completely changed their business around for the better and are doing extremely good cost control too. That's why I do believe, guys, technically, and the technicals do support that as well. Should be able to recapture this beautiful weekly uptrend here. And I do believe we're going for the $100 mark as next level of resistance. This is a few things at the same time, guys. It's an inverse head and shoulders, extremely bullish pattern, but it's also a weekly cup and handle at the same time. Those two patterns usually break heavily bullish. I wouldn't be surprised if we do see Square touching about $100 in the next couple of months. Company is positioned great. Wall Street loves how they've revamped the company. The numbers are good. The valuation is cheap. Everything moving in the right direction. May just be starting to play this one more aggressively myself. The last time I took a deep dive into Square was about midpoint of last year, and they were still going through their problems and still no clear solution. But now that has completely changed in only the last 6 to 8 months. Love this company for what it is right now. Now, with all that being said, sorry for the bit long video, but it's very important to understand Square at this point in time because they've completely changed their business around, and I do believe it represents a very good trade opportunity for the near-term future. So hopefully I was able to convey all of those changes in a positive light. Now let's move on to our index analysis. All right, so everything's still maintaining pretty much the same here, guys, right? Clear uptrend, daily bulls on SPY. As I've been saying for the past couple of weeks, we've never lost the daily uptrend since back in October pretty much, and that simply continues. We had a little bit of a mishap right here, never flushed the lows. After NVIDIA earnings just continue to mount higher highs at this point. So the daily bulls are in full control, daily uptrend just continues at this point, still looking for the daily higher low for further trend continuation. Anything above 493.50, just looking for that daily higher low. Bulls in full control right now, and to the end of the day, we're starting to engulf the hourly trend. So if we change this hourly trend to the bulls tomorrow, it means your daily higher low is set right here, 505.03, and we're potentially moving on to try and crack the upper bound of this trend line, but we've been stuck in this trend line right here for a better part truly of the past 3-4 months at this point. So bulls in full control, That being said, on the weekly, we're still overbought here. You can see very nice weekly uptrend as well, but still overbought conditions. Very tough for me to be buying the S&P 500 up here. I would rather wait for an extended correction if it does come in the month of March. If it is going to come, guys, March is definitely going to be the month for it because April and May and June are known seasonally to be very good months for the market. And then we also have the fact that we're getting closer and closer to interest rates coming down. So bulls still in full control. No short opportunities for the market just yet, guys. Moving on to QQQ. QQQ, same thing, right? QQQ's trying to recapture the daily uptrend right now. This looks like a little bit of a bull flag, right? Heavy engulfing move to the upside, bull flag sideways, potentially ready to break a bit higher. Now your future area that we may be able to touch is up here at about 447.48, top end of the trend line here. But bull's looking good after having lost the daily trend, right? QQQ, as opposed to SPY, QQQ actually has lost the daily uptrend a couple times in the past 3 months. QQQ lost it once here, lost it once here again. Now we have engulfed and we're back potentially to resetting this to the bulls. So SPY never lost it, QQQ did, but once again, bears lack of potential follow through by the bears on every single one of these drops. And that's what we've been saying, guys, over the past 3 months. The bears just can't follow through on anything. Very hard for them to follow through on individual names and by and large on the indexes as well. So your bulls do remain in full control right now. And on the weekly, everything is looking very gorgeous as well. Beautiful weekly uptrend in motion. If we do crack the highs, your new weekly higher low becomes 421.53. Just looking for the furtherance of the weekly uptrend, but same concept, guys. QQQ on the weekly still slightly overbought. So if we do have a correction, I would not be surprised if that happens in March. When that happens, guys, you really want to take note at the lows, the most recent higher lows. If this breaks bullish, this becomes your new higher low. If then we lose the higher low, daily downtrend, and lose the trend line, that's when we take notice. And that's when we know weekly consolidation is going to last for more than 24 or 48 hours, right? Now moving on to XLF financials. XLF having a good day here today. Daily bulls are still in absolute full control, guys. Nothing to say on XLF at this point. We really have to eye the all-time highs. So the all-time high area of resistance is coming up soon, 40.82, and then we're talking about 41.7. So this whole area up here really coming into it quickly. Bulls in full control on the daily. Take a look right here. Any daily consolidation, we were always looking for a daily higher low, anything above 39.3. Daily higher low for further trend continuation. Really not much to say in terms of this chart, right, guys? Bulls have just absolute full control of everything right now. It's up to the bears to prove us something. If not, we're just going to continue setting these daily higher lows and just continue grinding higher on all of these indexes. So looking very good. And financials doing a good job, guys, of rotating. When QQQ was down for a majority of the day, XLF financials was maintaining slightly flat. They had a little bit of a gap down on the morning, but after that, they maintained relatively flat, even though QQQ tried to dip a little bit harder all the way in to 1 o'clock. Financials really maintaining stable, and 11, 12, 1 o'clock, you can see here that they did maintain that rotation alive for the bulls. Great job. Now, XLV having a little bit of down day today, but that's okay. XLV has been doing a lot of the heavy lifting over the past couple of weeks, so just seeing them consolidate is no red flag at all. Just looking for a daily higher low, anything above 144.27, just for a daily higher low for just the continuation of the daily uptrend, guys. None of these daily uptrends are going to change unless we lose the higher high and higher low pattern, shift it to the bears, and start losing some of these 12 EMAs on the daily. I keep pointing out these 12 EMAs on XL, most notably SPY, XLF, XLV, and even the Dow Jones when we take a look at it, guys, right? So unless you lose that 12 EMA and you lose your pattern of higher highs and higher lows into lower lows and lower highs, well, the bulls will just remain in full control, guys. Bears are just not able to convert on the lower time frames enough to really push momentum to the downside to open up the capacity for a daily downtrend. So XLV still looking very good. And we're now significantly above the all-time highs. If we were ever to consolidate in an extended format over the month of March, I've always said that now we're well above the all-time highs. We could be just pulling back into the all-time highs when we do have that extended consolidation, talking about the 142 level, which is your previous all-time high. So XLV looking very good too. Now, IWM Russell has had a little bit of a breakout of our range today. Nice to see. So we were nervous whether or not the bulls were going to lose this daily uptrend right here and get a flush to a daily downtrend, which would just send us into further weekly tightening up of this range right now. But the IWM bulls have a chance at success this week. I need to see this weekly candle close above this 201. You can see we've been here twice in the past, not able to close a candle well above 201 before going back to the downside. So this is the crucial breakout moment for IWM Russell. If they can break above this 201 level, come back, retest it as support, there's a beautiful trade, breakout, retest trade for the potential continuation into late 2024. That's the trade that I'm now looking for. On the breakdown, it never got as close as possible to my 187 to 180 level. So the next area that I'm looking for it to respect is the breakout retest trade. Now, that being said, your daily bulls are currently in full control. Just need to break this area right here, 204.68. Do that, and you just continue this daily uptrend to the upside. And at that point, I really would like to see them close the weekly 205, 206. If you do that, your weekly bulls now remain in full control. You get the weekly uptrend back in your favor too. So everything looking good for the Russell. Can they maintain the gains into the end of the week? That is the one thing I'm looking out for. And to the downside, guys, look out for this one, 196.41. Break that to the downside, just daily consolidation, and we'll just perpetuate this tightening range that we've been in now for a better part of the last 2 months, 3 months almost since the month of December. So looking good. Now moving on to the Dow Jones. So Dow Jones also looking pretty decent here today, down 0.25, but still well above our targets, right? Anything above 38,350, just looking for a daily higher low for further trend continuation. And now you see why this level was so pivotal. We pointed it out in the past couple of days on the Dow Jones, right? Take a look. 12 EMA is your confluence area, and your 12 EMA, right? 12 EMA with the horizontal resistance, which is now support. That is the area that the bulls are going to be using as support, and they've already started using a bit of that over the course of the day today. So where would it be notable to us if the Dow Jones loses this area right here, uses it as resistance, and then flushes to the downside as a daily downtrend? You will know that your weekly consolidation is underway. At that point, we're looking for a weekly higher low, anything above 37,144, weekly higher low for further trend continuation, right? And if we do get the weekly trend, if we do get weekly trend consolidation here for the bulls, the 12 EMA is going to catch up to the price. We'll touch the 12 EMA, then probably be due for another little bit of rally into 2024. So the 2024 bull market, guys, is well started right now. I do not see this market being derailed by much of anything right now. All the cards are currently being played perfectly, not only by the Fed, but the economy is also cooperating as well. There's really no red flags to be looking out for as a whole. So looking forward to really smashing this market over 2024 and even 2025 as well. Everything looking very, very good. The bears still have just not shown up on any of our major indexes, so we'll keep an eye out for that for the month of March. We will have to consolidate eventually, guys. This has been a nice 4 months, but I keep saying a lot of your indexes just keep that overbought condition on the weekly. So now let's move into our individual stocks. So Apple, a little bit of news here. Apple was actually big time red before that news. You can see the news came out right at about 145-ish. And before that, Apple was significantly down on the day, almost breaking down into the 180 area, which was our huge area of support. That if they lost that, it was pretty much daily downtrend, right? So what happened to Apple? Well, Apple hit the brakes on their autonomous electric vehicle project. Apple has hit the brakes on its plan to build an electric car, according to a report. Apple move comes as consumer enthusiasm for electric cars wanes and competition intensifies as Chinese companies make a big market push. They're talking about BYD, guys. BYD is the only profitable Chinese electric vehicle maker right now. Actually, that's not true. Li Auto is profitable as well, but doesn't have the scale and size as BYD. Apple stock rose amid the news. As part of the electric car project, Apple was developing autonomous self-driving technology, somewhat like Tesla. Wedbush analyst Daniel Ives supported Apple's decision. Softer demand for EVs and competition fierce, he said in an email. EVs a different landscape from a few years ago than when Apple started this whole process. Apple saw the writing on the wall, so they realized not so easy to build and scale a car into profitability, is it? So many legacy auto manufacturers produce EVs at a loss, and we went over this slightly when we went over the Rivian earnings the other day. Guys, literally every single other car manufacturer other than Tesla and BYD and Li Auto manufacture EVs at a loss. It's just a simple fact. So it's tough for Apple to do the same thing, right? So Apple told employees of the decision to cancel the electric car project on Tuesday, according to a Bloomberg report. The iPhone maker reportedly had 2,000 employees working on the EV project, which started almost a decade ago. It does not get much more shocking than this, said Roger Langto, automotive analyst at Tech Insights. If you have more money than God and you decide not to pursue a particular concept, it is a massive rejection of the value proposition. It's true, guys. Apple has about $32 billion of cash on hand, and they generate about $100 billion in free cash flow a year. If they can't do it, then it just goes to show you how hard it is to have plans to build and scale a successful EV car at profitable net margins. Apple is shifting research and development to resources to artificial intelligence. So they're shifting that entire division over to AI. I think that's the best decision for Apple as well, guys. Now, off of that news, obviously positive news for Apple. So they came up on the day about 0.81%. Technicals, still the same, guys. Still looking at this 180 area. Break of 180. You have the daily downtrend on Apple. You have the weekly downtrend on Apple as well. But is it a problem? No, I keep saying this, guys. Your long-term bulls are still well in control of this chart right now. We're approaching this whole green box right now. 180 down about 165. Extremely solid support. Previous all-time high zone for Apple and previous big area of support that was not able to get through in the market sell down last fall. So still looking for this area to play as support. Now, what do the bulls need to do to reverse these lower timeframes? Well, we need to recapture the high pretty much of Friday's trading. If we can get above 185 at this point, the bulls will have successfully reversed this daily downtrend potential into a new daily uptrend. Your weekly higher low will be set, and then we'll be looking how high can the bulls get in relation to the most recent lower high, 196. Get me as close as possible to here. You give yourself a chance to reset the weekly uptrend later into the month of March and into early April. So Apple's still not out of the woods yet. And I keep saying, as long as it maintains these lower levels, I will keep playing Apple every single week, writing short puts between 180 and 170 as low as possible that we can get, while still respecting our strategy rules of 0.5% to 1% per week. So looking good on Apple, the start of a potential run here, but we can't yet rule out the bears. They still have a capacity to roll this over, but just the moral of the story, guys, is even if the bears gain short-term control, it's for a big buying opportunity for your longer-term monthly bulls, right? So perfect on Apple. Now, moving on to AMD. AMD also looking pretty good, 1.13% to the upside. So AMD is looking for the bull flag into bullish breakout here. That is exactly what they're trying to do, using the 12 EMA as defense nicely. So we'll see if they can do that. They've been trapped in this range for the better part of the past 4 weeks. A breakout to the upside would just mean as well, not only have they recaptured the daily uptrend, but also means that your weekly consolidation is finished. Nice weekly bull flag here for a potential further trend continuation. Why are we looking for the trend continuation? Because your monthly bulls are in full control of this chart. No sign of pulling back just yet. Weekly, they were not even able to get below the previous range of all-time highs. That's what we were targeting, guys, 164 to 168. You can see how many times they got rejected from here. So just cooling off the price ever so slightly, even though we're still overbought. Sideways consolidation is a weekly bull flag, and now we might be looking for the weekly breakout. That would be a breakout of the highs, 183.50. And to the downside, guys, if obviously we lose this pattern, set the daily downtrend, then we're looking at this support area right here, 164 to 168, to keep playing as short-term support. If we do lose that, though, however, guys, it would be weekly downtrend into March, just due for a little bit of monthly consolidation here. AMD has so much room to consolidate, guys. My sweet spot for AMD, if we come down 150 to 140, that's where I'm maybe looking to play the company myself. Now moving on to Amazon. Amazon looking good on the day, 0.68%. To the downside, but not giving back too much gains, right? The reason I say it's looking good is because we have so much space here, guys, right? So after having potentially almost lost the daily downtrend here, almost cutting the lows, the bulls just engulfing after NVIDIA earnings. Now we're looking for a daily higher low, anything above 166 pretty much. Daily higher low for further trend continuation. We are looking soon for the trend breakout to the upside. It has been sideways weekly consolidation now for a better part of the last 3 weeks since their earnings cycle. Weekly bull flag, kind of like AMD, right? Weekly bull flag, looking for the breakout. And where are we breaking out, guys? all-time highs. 177 first target, second target 187 on Amazon. No red flags at all. Company is set up absolutely perfectly for this breakout. We'll see what happens. And to the downside, if ever we take back too much of this move over the forthcoming weeks and set the daily downtrend, no problem at all, guys. It's still just weekly consolidation on Amazon. And I'd like to see them potentially touch this 12 EMA right here, lower 160s. If we get to the lower 160 areas, that's where I'm definitely going to play more and more of Amazon. Moving on to Google. Google, nice little rebound here out of its support zone. So we've been keeping an eye on Google very closely because it's in a big area of congestion. Previous resistance is now current support, 141 down to 138. We're looking to continuously play this bounce zone right now. So the bears have the daily downtrend as of yesterday. It's up to the bulls now to bounce as high as possible in relation to 146. Get me as close as possible to 146. You set up the potential for a higher low and then daily trend change back to the bulls. We haven't had a daily uptrend since back here, right? Since prior to their earnings. So it has been over about a month at this point that Google's been stuck in this tightening range. That being said, I've always said that it's a very, very decent buying opportunity down here. The valuation is cheap. There's long-term support and your longer-term bulls are in full control of this monthly as well. Now, if we do break down from the 138 area, guys, the next area that we are targeting is about 134, 135. So you can see it better right here. It's going to be the lower bound of this range right here. So it's about 134 all the way down to about 132 area. And that becomes an even juicier buying opportunity for Google. If it's a buy up here, it becomes a no-brainer down here. And this line right here, 127 to about 121, that is when I really back up the truck to buy as much Google shares as possible. So all in all, I am buying. First target right here, second target in the 134 to 132, and then anything below 127, just continuously, making plays on Google anytime it's within one of these levels. But as of now, guys, no signs that this level right here, the 138, is going to break just yet. I think that it would only break personally if we have a broader market sell-off. But as of now, everything looking good. Now moving on to Meta. So Meta also looking good, up over 1.10% on the day. 487 upside targets, guys, is obviously going to be your $500 of psychological resistance right now. No real red flags for the bulls right now either, right? Just kind of sideways consolidation after earnings for the past couple of weeks. And on the weekly, they really haven't cooled down their weekly RSI much, but the daily has come down significantly, right? So that has to be notable to us. Another thing, we haven't lost the 12 EMA in a very long time, so that should be our short-term guide. Currently, just trying to set the daily higher low, anything above 461.20. Was just looking for the daily higher low, and seems as though the bulls got that today, right? Hourly downtrend, as I was teaching you guys, when the bulls recapture the hourly uptrend to the upside, usually your daily higher low is set. We're just on for another leg higher, potentially bringing us up into the $500 level. Now, if we reverse this for ever which reason, and we flush these lows, 462, opens up the door for a daily downtrend. Is that much of a big deal into March? No, because the weekly bulls have so much space, guys. Anything above 342, just looking for a weekly higher low for further trend continuation. So Meta, if Meta sells off in the month of March with the rest of the market, I'm looking for Meta 430, 420 for some swing trades. Now moving on to Microsoft. Microsoft also looking good here, guys. So after having a daily downtrend on Microsoft, the first of its kind since the month of September, well, the bulls after NVIDIA earnings, putting in an engulfing move, which created enough space to set, what do they set? A daily higher low for the potential trend change. Now, seems as though they have said it today. Microsoft trying to engulf. Look, Microsoft respects these things better than most, right? Hourly downtrend. You know, while it's an hourly downtrend, daily consolidation is underway. How do we know when that's shifting? Look at this engulfing move into the end of the day. So if tomorrow they change the hourly trend to the bulls, it means your daily higher low is set. And then we look for the bulls to crack 415.61 to get the daily uptrend back again. And since they lost the daily trend here, it was weekly consolidation. So when we get it back, if they confirm the new daily uptrend, your weekly higher low is set right here, 397.41. And then we're looking for another weekly move higher. So Microsoft with some good consolidation, no longer truly overbought on the weekly, no longer truly overbought on the daily as well. So Microsoft has really cleared itself some room to run over the past couple of weeks consolidating. Microsoft, even though we're regaining the short-term timeframes, if for ever which reason, guys, we lose them over the next couple of weeks and we set maybe some downtrends here, I'm looking for Microsoft 385 or better for a swing trade. Now moving on to Netflix. Netflix looking very good now, finally breaking nettly above our 575 area that we've been hugging for a while. 602 on Netflix right now. Upside targets for Netflix remain 620 First line, and then second line is the all-time highs right around your $700 mark. Finally, consistently above our area of 575. I was saying how hard it was to break 575 in the past. Well, it was proving to be challenging here as well, but now the bulls finally doing it in style. So daily uptrend is back to the bulls at this point. Any consolidation now just going to be for a daily higher low, anything above your 568, daily higher low for further trend continuation. This on the weekly is potentially looking like a weekly breakout as well. So weekly bulls are in full control. They never lost the weekly uptrend this entire time, looking very good. Your daily bulls, full control as well. So everything leads me to believe that we are going to potentially tackle this area right here, 620 resistance coming up shortly, and then your all-time high. The wind is in the back of Netflix's sales right now. No red flags for the company. Their earnings were fantastic. The technicals look very good as well. Where would I get a little bit nervous, guys, is if we break out now, right, and we pull back immediately. If we pull back immediately below 575, just shows you that the bulls were not ready just yet. Could set up for the daily downtrend. At that point, we'll just be heading into a little bit of weekly consolidation. I would like Netflix personally, anywhere between 520 and 500 is where I'm looking for the company. That would be a decent sell-off though, guys. We're talking maybe, 11, 12% to the downside plus. So that would probably only happen, in my opinion, if we get a broader market sell-off. Now moving on to NVIDIA. NVIDIA looking fantastic as well. Also trying to set somewhat of a bull flag, right? So after such a big move after earnings, consolidation roughly sideways, not giving back a lot. You can see that right here. Loss of the hourly trend, right? It is an hourly downtrend currently, roughly flat though. So we'll see. Once you guys see the hourly trend recaptured by the bulls, your daily higher low is set, and then NVIDIA will be attacking its all-time highs of 823 again. At that point, guys, upside targets remain 900 and then all the way up to $1,000. It could reach it. We did the valuation together, right? 900, 1,000 is not that bad. There are far more overpriced stocks in the market than NVIDIA right now. Okay, just in terms of their earnings. Now, in terms of consolidation, if we continue daily consolidation a bit more, I wouldn't be surprised if we touch this level right here. 742, extremely good. Previous resistance should be now clear support for the bulls, and your 12 EMA as confluence right down there. Everything looking good for NVIDIA too. On the weekly, everything is just the same as well. No weekly consolidation underway. Since we never lost the daily uptrend, still no weekly consolidation. If we do lose the daily downtrend here for some consolidation in March potentially, that's maybe when you expect your weekly consolidation at that point, expecting it to catch up to the 12 EMA. So maybe 700, 680 at the lowest for NVIDIA, and that would only be a sell-off from here of about 14%, which in the grand scheme of things, guys, is not that much. They move a lot quicker and more volatile than the market. Even a 14% sell-off after this size of move, guys, NVIDIA can pull down literally 14%. Look at this. They can pull down 14%, and still, in terms of a fib retracement, that would literally only represent, coming down roughly to, the 38% retracement line, which is nothing, guys. There's so much space for this stock to consolidate if and when it chooses to do so. Now, moving on to our three last ones, Tesla. So Tesla, not looking too bad today. We did crack our previous most recent highs here, setting a high on the day of about 205.43, trying desperately to fill the rest of that gap up to 207, and the daily uptrend continues. So we are looking for this break of your previous highs to continue this daily uptrend. The bulls got it today. It's not pretty with this pullback on the day, but they did get it. So nice continuation of your daily uptrend. Daily bulls are in full control. Would like to see this push at least into the 207 up to 210 area a bit more before we get a little bit of daily consolidation. When we do get the daily consolidation, anything above 191.18, just looking for a daily higher low for further trend continuation. And I need, like I was saying in yesterday's video, guys, I need to see this daily trend continue all the way as high as about 220 to 230. Why? Because we need that size of a retracement on the weekly. If we get up all the way to 220 or 230, that's a 50 or 61% retracement of this move to the upside. It sets the bulls up nicely to have enough space to eventually reverse, set the weekly higher low, and then weekly higher high, and finally reverse this nasty weekly downtrend that we've been in for a very long time at this point, and also the monthly downtrend too. Now, that being said, if for ever which reason the market just rolls over and the rest of the market too, well, we're going to be looking for these lower levels here, guys. Keep in mind, if we do come down, the support levels are still gorgeous, guys. 180 down to 170 is still a no-brainer buy for Tesla, in my opinion. As close as possible as you can get to 170, the better. And we also have this downtrending trend line as well. So horizontal support, downtrending trend line should meet themselves together. This should meet themselves together right here, right below 170. That's why I say it's my preferred zone for Tesla. But Tesla really at the bottom of its cyclicality right now. I mean, it's proved that it can get through a very tough interest rate cycle with a very tough demand cycle for consumers as well, right? Everybody's crunched with money, and yet still the company has positive operating margins, positive net margins, and decent free cash flow. So it's weathering the storm just fine. Now moving on to Palantir and PayPal. So Palantir doing a great job here, guys. Today we were looking out, can the bears complete the daily downtrend? Well, the bulls today said no. So looking very good. The size of this bounce is now adequate. If ever the bounce tops out before your double top right here, just gonna be looking for a daily higher low for a new daily uptrend. They lost the daily uptrend here. Now we're looking with this bounce to recapture it. So far, the size of the bounce is very good. Talking about a bounce just by looking at it, probably about 70%. Yeah, it's almost about 75%, right? So very, very good size of the bounce. It sets the bulls up nicely for the engulfing move, or all the way engulfing, or at least the two-step breakout to the upside, reset a daily higher low right here, and then move on to higher highs. So looking very good on Palantir. Nothing bad to say about the company. Overhead resistance targets still remain at about $28 to the upside. And the weekly levels are looking good too, right? So until we confirm the daily uptrend, we can't say for sure that the weekly higher low is in, but it is looking good. Even more sideways consolidation for Palantir would not be bad. We'd just be looking for support levels to play out. 21.5 down to about 20.5 is support for Palantir. You can see that all the way back here, and is your previous zones of 52-week highs as well. So if we do consolidate sideways, that's where I'm looking for a buying opportunity for Palantir myself. But everything looking good, guys. The bulls still remain in full control. Now, lastly, PayPal. PayPal finally doing step number one. So finally breaking above and closing above $60. We were trapped in our range that we could not lose. 57 up to about $60, this huge range of consolidation. We're now back above that. So hopefully we can go a little bit higher into the next coming days, really put some distance between us and this zone right here. And now the bulls are looking good. They've almost recaptured the daily uptrend. Break of this high right here, 60.28, would be a recapture of your daily uptrend. And then we're going to be looking, guys, for upside targets. Need to break this downtrending trend line right here. I know I keep bringing it up, but it's because it's a 1.5-year trend line. And you can see after the announcement of shock the world, pretty much, we tried to break it to the upside, and you can see how hard the market rejected it at this point. So hopefully third time's a charm. We're going to try to smash this level one more time. The weekly bulls are also looking pretty decent. Nothing bad to say with them, right? The fact that they haven't lost this weekly lower level of about $57 leads us to believe that the weekly bulls are still here, still fighting. Now we need to put in a move above this trend line, talking about $62. So willing to see that break in the next 2 coming weeks, if at all possible, continuing to cover up some of this gap after the earnings. So step number one is complete. We've closed above $60. Now just need to get the daily uptrend going and then break above this trend line right here. So looking decent on PayPal, guys, coming back ever so slightly. So now that's pretty much everything I had for that. Let's take a quick look at my portfolio, and then that's it. So guys, taking a look at the portfolio, you can see that now we're actually outperforming our indexes on the year for the first time this year, after starting off in a fairly rocky way after dealing with a few interest rate sensitive plays, a few plays that were China sensitive that we got assigned back in December. Well, we've been able to write covered calls on those plays since being called away on those as well. So we closed most of those trades that we got assigned in December with some profits, and now we've had full buying power throughout the month of February, and we've been writing premium aggressively across multiple different stocks, right? So you can see here, very nice increase over the month of February, and we should continue to outperform our markets here. Our benchmark NASDAQ is sitting about 6.54%. We're up to 6.77, and the S&P 500 as well, we are beating them too. So we're up about 6.77, and they're only about 6.28. So great job beating out both indexes so far. In terms of the positions, you'll see that I did close a few trades that we had open prior. So let's just show these zeroed positions. So we did close Workday 270s that we had for the earnings play. That was a very juicy play indeed. So you can see Workday, we closed them, we had opened them just yesterday prior to earnings for about $2.35. You can see we closed that for about 95% plus profit, right at 7 cents. Just going to use the capital for something differently. So very nice play right there. We also had another play that we took, which was the 4 $60 puts that we were talking about yesterday. We commented the fact that we got about $1.50 for these, and they were 3 weeks out. And if 4 were to do anything, pretty much just maintain flat or go slightly up on the day, most of the value of those contracts, most of the value would come out of those contracts, right? Well, that's exactly what happened. You can see the 60 puts, we wrote them yesterday for 147. This was 3 weeks of time, and we were able to close those pretty much for their time value today for 30 cents. This was the only remaining thing on this contract, was the remaining time value in them for the next 3 weeks. You can see we closed them for 30 cents. So very juicy profit, almost 2% in 1 day on that trade. The other trade we closed was Unity. So we had the Unity 25 puts for earnings. You'll see here that we wrote them pretty much yesterday for about, where's the trade, for about 20 cents. And those were pretty much closed on the day here today, automatically closed at about 2 cents, which is 90% profit. So everything looking very good in terms of our earnings plays that we did do. We still have the Google, we'll go from the top. So the Rivian covered calls are still on. We'll see what happens. Won't mind rolling those if ever it does end above 11.5 before the end of the week. We'll just roll those 1 extra week forward and capture more premium. Caesars still looking good. Wrote them for 27 cents, down to about 6 cents. Should be able to close them pretty much worthless. Caesars has been nicely up. Our strike price is down all the way down at $39.50 pretty much. I'd be highly surprised if Caesars closes below that. We're going to try and close these for about 2 cents, 3 cents tomorrow. Apple 180s still have those, pretty much 50% in profit. So we'll just try to close those over the next few days. Baba covered calls up slightly because Baba's getting closer and closer to 79. We should be good by Friday. Worst case scenario, we just roll these for 1 or 2 weeks forward and capture even more premium. We wrote the eBay puts, the eBay 41s for earnings, got 25 cents for them. So just over 0.5% for eBay, and eBay had earnings today and they performed fairly in line. You can see that after earnings, they're actually up to about 45.75. So we should have no problem closing these tomorrow for pretty much worthless. And then the Google 138 puts also performing fairly well too. I would be looking out for another contract over the course of the week. So if Google drops tomorrow, I'll probably get cheeky and maybe write the 139s, try to get a bit more premium out of them. That's pretty much all the trades. So the Applied Materials calls, going to be wanting to close these over the next few days. Applied Materials has been on a very nice run lately. It's currently up to, well, now it's down in the after hours. Not too sure why. Let me check the volume on this, right? So only a couple thousand shares. So we'll see how it opens tomorrow. It got as high as about 205. Maybe not going to hit our 210, so maybe just be looking to close this at a slight loss here. And then everything else is the same. The two that I wanted to show you guys is not only do we have a swing trade on ACAM, which is what I was saying, I want to start taking smaller value swing trades to show you guys that even if you do have a small account, if you're investing in good companies that get you sold off aggressively, there is still some decent opportunities to make some money. Talking about 2-to-1, 3-to-1 risk to reward trades, and 2 more that I took today. You see that I could have gone a lot heavier on these, but to maintain with the small account strategy, let's say, I only went with $2,000 each. Well, they're kind of one and the same, SPGI and MCO. We've been talking about these for a while, right? So extremely solid companies right here. In terms of MCO, the reason why I took it, guys, we're looking for the monthly higher low. And if we break down the time frames, you'll see it's been in sideways weekly consolidation, down after earnings. Now here's the breakdown on the daily, the reason I took the trade. So what are we looking for here, guys? We're looking, number one, your monthly higher low. So your bulls are in full control. That's what we need to understand. So all of the trades that we take should be leaning bullish. Now, in terms of the weekly, we're looking for the weekly turnaround after earnings. You can see this right here. The daily came down, got a nice little bounce. We're looking for the daily higher low for continuation into a new daily uptrend that has not happened since earnings. So we're trying to snipe the daily higher low. And how do you know it's a daily higher low, guys? Go down to your hourly time frames right now. So what we want to see into tomorrow pretty much is, I'm taking a chance at this, but we want to see the recapture of the hourly trend change. That's what I'm looking for. I'm looking for to get the daily higher low. I took this trade a little bit early. If you want to be a more conservative bull, you can wait for the actual hourly trend change to manifest. I feel pretty good about the stock right here and its ability to set that daily higher low, at least in the next couple of days, and then we'll be off to the races. The stop loss goes below here, because if this is not the daily higher low and we're ending up in a daily downtrend, you're just wrong. And unfortunately, that is not yet the monthly bottom, and we have to readjust the strategy down the road. However, if you are right, well, your risk is only about $13 from current price, right? $13, $14. And the upside, first target upside, is going to be about 377 to 407. That's roughly about, let's call it about $30 to the upside. So it's a 2-to-1 risk to reward. You're risking about $14 for about $30 worth of gains. And then the upside is really past the all-time highs. And these companies are extremely solid. The strategy is the exact same thing with SPGI. These two companies are so similar. We're just looking for the breakout retest of your previous monthly range. It's a monthly uptrend, right? So breaking out, retesting, and run. We're looking for this weekly downturn to turn around since their post-earnings sell-off here. Looking for the same thing, daily bounce, daily higher low for potential trend change continuation. No hourly trend changes yet, but I'm expecting it in the next couple of days. So I'm going a little bit aggressive, but a more conservative bull may just want to wait for the hourly trend change to get that confirmation signal, take the trade whenever that happens, and that way your risk is limited to the lows right here, about $10 of risk to the downside per share, and your upside is your previous highs right here at about $460. So we're talking about upside of about $30 worth of upside, and you're only risking about $10 to the downside, right? So that's about a 3 reward to risk 3-to-1, right, trade. So that's exactly what I want to look at. And if SPGI, if we get this properly and it starts running beyond our previous 52-week highs, we are just holding this trade, guys, all the way through the all-time highs because this company is just so solid. So we're trying to pick monthly turnaround points and using our lower time frames analysis to try and do that, right? So hopefully that was educational for you guys in terms of those trades. Everything else in the portfolio, relatively the same. Didn't really touch anything else. Just wanted to explain what we did on these two little swing trades down here. So hopefully that was helpful, guys. That's everything I have for you guys today. If you enjoyed the video, consider dropping a like. Would really appreciate it for the classic YouTube algorithm so they can promote my channel more. And number 2, if you are new to the channel, consider subscribing. We do these videos every single Monday to Friday. In terms of earnings reports that we go over together, usually about 1 or 2 a day throughout earnings season. And then obviously our technical analysis rundown, and I show my portfolio as often as possible, time in the video permitting. And lastly, guys, if you have any questions whatsoever, if you want me to look at a specific stock, technical analysis, or you want me to do maybe a company that I missed their earnings, you can ask me that too. An options play, technical analysis, anything you guys want, leave it down below in the comments. I'm here to make your life easier in that respect, and we can cover these things together on the channel. If not, I'll just answer you in the comments, usually get back to you within the first business day. So take care, guys. It's been a pleasure once again. I will see you in tomorrow's video after the close. Peace.